Okay. Hello, everybody. It's time to continue our event, the international conference that is dedicated to the future of Europe. This is the 11th edition of this international conference that is organized by the Bucharest University of Economic Studies, uh, by the faculty of this university, the Faculty of International Business and Economics. And before starting this panel, I want to say why we are including year by year a section, a panel that is dedicated to the financial services, to the financial sector. In the first edition of this conference that was organized in 2006, 14 years ago, the first paper that was presented to this conference was about the effect of financial development on sustainable growth. This was the first paper presented by Peter Bakos and Irvin Seb from the Central European University of Budapest. So this is the first paper presented in our conference, and it was related to this connection between the financial sector and a sustainable economic growth. In our opinion, this financial sector plays a very important role in the economic development. And today, we propose a debate on a very, very specific issue that these years significantly attract the attention, draw the attention of many specialists. The idea of protecting the consumers of financial services. Before giving the floor to the first presenter, that will be Cristian Popa, I will present him in a few seconds. I want to provide 4 ideas, very short ideas about this topic. First of all, I want to say that when we are acting in the financial sector, we are acting from both perspectives. We are acting as a producer of capital because we are saver of this capital, and also we are consumer of this capital. So many of us, we are in the same time producer and consumer of the capital by benefiting from these financing schemes. The financial intermediation through banks, through non-financial institutions, are the representative of the producers of capital, those savers. Yeah, so they are representing our interests in this financing scheme. So when we are talking about consumer protection, in fact, we are talking about adding a new right for one category that are the consumers of capital in our case, giving them an additional power, bargaining power, in front of the financial institutions, in front, in fact, of the producers of capital. So it's something strange that the regulators are thinking to empower consumers, but these consumers, do not forget, that are in the same time the producers of the capital, most of them. And also, we should not forget that the real bosses in the capitalist system of the market economy are the consumers. Yeah, they are making poor men rich and rich men poor. Yeah, there are no easy bosses. So, in fact, when we are, and this is the last idea, when we are thinking about consumer protection, in fact, we are thinking about regulations of the financial sector. And today we see that the regulators are thinking to capping of interest rates, to impose a maximum leverage for the beneficiaries of financings, to impose a minimum capital requirements for financial intermediation, to impose specific services and specific efforts for the providers of the financial schemes to the market. I'm thinking, for instance, to the idea of educating the consumers of financial services. This is a task for the banks, for instance, or for non-financial institutions, and the financial institutions are using a lot of resources to cover this extra cost imposed by regulations. So for these reasons at least, we thought that it is very important to start the debate, especially because of the level of European Union these days. We see that the regulators from the European Union level are reacting this idea of empowering the consumers of financial services in their relations with the banks being the representatives of the producers of capital. With these ideas in my mind, I want to introduce the first speaker of our section, plenary section, the first keynote speaker, Mr. Cristian Popa, that is today a member of the board of the National Romanian Bank. And I think that he has very important expertise in this area of financial services because he has also a previous activity, essential previous activity in this particular sector. So, Cristian Popa, I'm inviting you to take the floor, and if you want to add more about yourself, about your background, you are free to speak. The floor is yours. Thank you.
Good afternoon, everybody. Thank you very much, Mr. Cristian Paun, and thank you for the invitation to participate in this panel together with highly respected co-panelists. I'm very glad to be here, and I take the opportunity to congratulate you for organizing this event. I want to mention that the ideas that I will express are personal as an economist and do not represent the point of view of the National Bank of Romania or CFA Romania institutions which I'm associated with. And actually, when it comes to consumer protection, the main public institution responsible for that, even in financial services, is the ANPC, the Protection Consumer Agency. I will talk about interferences of the state with the private market prices and their effects, and touch upon the local landscape on this matter. And when it comes to consumer protection in financial services, my opinion is that the best protection is education. The best protector of my interest is me. And to be able to do this in an effective way, so not to be disadvantaged, let's say, by the others, by my counterparties, I have to educate myself, to learn, to understand what I'm buying, at what price, and then under what conditions. It's easy to believe that there is a brilliant mind somewhere in the state's apparatus, bureaucrat, which identifies each and every situation when a consumer is disadvantaged. But this beautiful mind doesn't exist. It cannot exist. A bureaucrat will never be able to forecast or assess all the situations in which one part of a trade is disadvantaged by the other. The best mitigating factor, like I was saying, I think it's financial education. It's not a luxury, it's a necessity. NBR is doing it, CFA is doing it, ASA is doing it. The consumer would be in a better position to do it, either to try to reach to this literature, to this education. I'm coming from the private sector, like you are mentioning. My background is in asset management. Before managing a whole pension fund, I managed institutional equity portfolios. I would be naive to believe that the state could and would protect my portfolios from declining share prices. So in this idea, so that I can only invest in the shares that do increase in price. I think it's the same with prices in the economy, in the free market. I'll continue by focusing more on the protection by price regulation. I'll do that because price regulation is the most clear example in which the consumer actually loses from this price regulation. When the state establishes a maximum price, the consequence can be only one, and that is limiting, reducing, or even eliminating the supply. Whether we're talking about a food product, gasoline, or capital, the price of money, the result is the same. It's quite probable that some of the buyers that were willing to pay that price to be de facto excluded out of the market due to this regulation, mainly when the regulation is too tight. It's very tight. I will share a simple example. If tomorrow the state would regulate the price of potatoes, let's say, below the cost of production, in a moment's time, potatoes will disappear out of the shelves. So there will be no potatoes in supermarkets. The supply would disappear, and of course that the black market of potatoes would appear with higher prices than yesterday. This is because the seller now assumes a new risk by not complying with the law and by selling in the informal market, let's say pe sub tezgha in Romania. In both of the cases, the potato consumer loses because he either has lost access to the market or he has to pay a higher price on the parallel market. That market would have major function issues in my opinion, and there is ample literature on this. It is the same when we talk about the price of capital. If the price that was set by the regulator is lower than the economic costs, then the offer, the supply of that product disappears. The capital is a product, it disappears from the shelf basically. On top of that, regulating the interest rate can discourage savings, loans, and by way of consequence, investment. I think it's a very good idea, like you, Mr. Paun, was saying, to express the consumer as also the producer when it comes to capital, because consumers are quite frequently the same as the producers, as the savers of capital. Of course, the legislators have the power to decree maximum or minimum prices, but the question is whether or not they can really achieve the goals they want to achieve. Can a legislator force a producer to sell his goods below the cost? In my opinion, I think this is not possible, at least not in democracy, because this violates the producer's right to dispose of his own property. The same is being the same with when we're talking about capital. The state cannot strongly enforce an economic actor to do bad business, and as we know, selling below cost is a bad business, is a bad deal. Mises is telling us that there is a long history of price caps. Emperors, kings, dictators have tried to meddle in the market phenomena. Did they succeed? Of course they didn't. Their attempts all failed. Market laws cannot be constrained by laws made by regulators. We are a country that has lived under socialism. We know quite well what happens when the economy is planned, when prices are controlled by a very smart state. So we should think about this when we're asking the state to control some prices. Classical economists often spoke of the impossibility of price control. What were they saying? What were they actually saying is not that decrees are impossible. It's in the state's right to write regulations, to write laws, but they cannot achieve the goals desired by the government, and they basically worsen the situation, in no way improve it. It is very probable that according to the intention of the legislator, the final result of his interference in the functioning of the market will be even more undesirable than the initial state of affairs, as I was saying in the beginning. In addition to this, the control of the price of a single good leads to the extension of control of other goods. Mises also gives an example with the milk. The intention sounds good. It's good for the little kids to have cheap milk, to have access to milk, but milk producers will be forced out of the market, or will ask for the lower input price, animal feed, because otherwise they will lose money. The price control in this way will be extended to feed producers. The feed producers, when their turn comes, will demand regulation of the price of seed producers and labor producers. And in this way, step by step, they will go towards full control, towards a planned economy. I would insist on some historical example. I said that kings and emperors kept trying to control prices. I recommend all our followers the studies of my colleague Christian Bicchi. He published very high quality articles on the subject. He brings some historical background on this example, and he comes with the example of Diocletian, the Roman emperor who tried to control inflation by imposing a system of price controls, which proved to be a great failure. With his edict, he did nothing but worsen the situation of the empire. In the year 301 after Christ, Diocletian issued his famous edict on maximum prices. He set limit for over 1,000 products. For non-compliance with the law, he punished the ones that were not complying by that. both the sellers and the producers. What had happened, a lot of blood was shed in this way. The markets were emptied, shortages were installed, and the law was revoked in quite a short period. The laws of the market were not defeated, not even by the emperor of the Roman Empire. So I think it's a good example, and my colleague writes about this very nicely. The characteristics of the free market and of the market price is that it tends to balance demand with supply. This is clear, we all know it. But if regulators or legislators set prices at different levels than the one set by the free market, then this balance is disturbed. Thus, in the case of maximum prices, there are potential buyers who cannot buy, although they would be willing to buy at that price set by the regulator. Similarly, in the case of minimum prices, there would be potential sellers who cannot sell, although they would be willing to sell at a minimum price set by the authorities or even lower. Consequently, it is possible that only those who come first in the market, or only those who have privileged positions, let's say they have network, or without scruples, or violent ones, are able to trade. So only special people will be able to trade. So you get the idea. Historical lessons must be lessons for the present, in my opinion, to learn from in order not to make the same mistakes, and even to use these lessons in formulating today's policies. Another historical lessons, which I will not dig very deep into, also pointed by my colleague, is the US rent control. Rents below market levels have led to a reduction in rental supply and very reduced incentives to build other homes, resulting in higher rents in the sector that was not supposed to the price control. They also created an under the table, an informal market of rentals. It has lended to high fees, let's say initial fees to be able to rent a house. Some consumers have been happy for a while, but in terms of economic policies, it has been a great failure. And actually, on a longer term basis, a lot of people suffered. And there is another problem. Once such a regulation is used, that it could be difficult to reverse it, especially if it has large negative effects, but observable only on a longer term basis. So some people will have the effect that the regulation is working, but you never get to see just on a long term the effects. I will move a little from the worlds of ideas and history to the world of the Romanian reality, and I will share a few ideas about the law that caps the interest rates. There is a law to regulate this in Romania. It's a law that was passed by the parliament, but currently it's under review by the Constitutional Court. The National Bank has shown its willingness to work with the legislator so that the law does not create disruptive effects in the financial markets. It is unfortunate that the recommendations of the central bank specialists were not taken into account. If this law was promulgated, my opinion is that lending would suffer just at a time when economic recovery should be a major priority to build the economy after the pandemic crisis. Also, the banking sector is a strategic sector of the economy, so it's necessary for such a law to be accompanied by an in-depth and well-founded impact study to analyze the effects. Unfortunately, this study does not exist. I'm also not aware about the existence of a serious discussion about the draft law project. The link between the level of lending and the level of economic development of the country is strong. The capital must be allowed to circulate, to flow. If a law affects the supply of loans, as can be the case with the law that we're talking about, then the effects will be seen in the economy, negative effects, because this would reduce the access of the entrepreneurs and the citizens to loans. Also, it could produce disequilibriums in the credit market and affect financial stability. The banking sector must be allowed to fulfill its mission, in my opinion, and that is to lend, to finance the economy, to finance the entrepreneurs, to finance the Romanians. And how interests were set in this law is a total mystery, because the impact study that I said about earlier does not exist. How the law defines this excessive interest, because it's a law to forbid excessive interest. Excessive interest is defined something like something superior to the limits established according to some article. So basically, the legislator just assesses what is excessive in his opinion. Under this law, the interest on my mortgage, for example, is considered excessive. It is not, in my opinion. It does not seem excessive at all to me. I entered in this contract voluntarily. With this law in force, I think the bank would not have sold me this loan because the price imposed would have been too low. I would have basically been kicked out of the loan market. The average loan for a mortgage in Romania is 5.7%. On the formula of this law, the maximum allowed for a bank to sell mortgage loans would be around 3.7 percentage points. So that would be the maximum interest that can be asked by the banks. At this interest rate, it's possible that this loan to bring loans to the banks, case in which I think the product could basically disappear out of the shelf. If we look at the provisions of the law, there are things that stand out. First of all, the interest margin is regulated. It is clear that certain consumers will no longer be able to access financing. The most risky ones would be affected in general, so with lower incomes. The calculation formula are not right either, in my opinion. The banks and the IFNS, or non-banking financial institutions, would be treated differently. So we would have two kind of rules for two different financial institutions which could sell the same product. And some provisions could lead to absurd situation. For example, the reference interest rate, if the reference rate is zero, the non-banking financial institutions would have to sell their products for free, because the formula says that their maximum interest rate should be 2 times the national bank's benchmark rate. If that rate would be zero, then the seller of the product would have to sell this product at zero. For sure, that would mean a loss. So for sure, this product would disappear. It is clear that there will be significant harmful effects. Some of the Romanian consumers would be denied access to these loans. I will try to close in a more constructive way. What can be done? First of all, when talking about regulating prices, or about the whole picture, first of all, transparency on costs, transparency on credit conditions. Maybe a portal to compare easily the costs and the conditions of the same product from different institutions. What else can be done? Maybe more studies, more analysis by the institutions that are involved. We need to study well a law that has major implications in the financial market, in the financial stability of the country. So we have to look deep into this and not rush the project. And also financial education. Sorry, like I was saying, I truly believe that this is the best protector for consumers. It's the consumer's education. So he knows best that to protect his interests, he knows best to negotiate to obtain the same price. I also, the last idea I want to share with you, I said at the beginning that the main institution responsible for consumer protection when it comes to financial products is ANPC, but I would not close the discussion without mentioning another instrument that is close to the National Bank of Romania and available to consumers. That is the Center for Alternative Dispute Resolution in the banking field, CSALB. CSALB is an independent, apolitical, not-for-profit public interest entity. It offers two types of alternative dispute resolution procedures to the consumers and also to legal entities. The two products that are offered are conciliation, the procedure by which the conciliator proposes a solution which the parties may or may not accept, and arbitration, the procedure in which the referee, so there is a referee, that announces a mandatory solution. The number of requests, files, and amicable solutions has increased significantly in the last 4 years, and I encourage Romanians to turn to CSLB for resolving the disputes with the banks. I think this is it from my side. I will pass the floor to you, Christian. Thank you very much.
Thank you, Christian. Of course, here we are expressing our ideas as economists, as specialists, as experts. Of course, we are working for public institutions or private institutions, but you are invited here to an academic conference to express your ideas as experts. And I'm very happy that you pointed out the same ideas, that the consumer is the boss, and he need to be educated. Yeah, of course. And by education, by understanding what you are doing, you are protecting yourself a lot. And of course, what is very interesting in the case of financial sector is this: when we are talking about potatoes, of course, we are not producing all of us potatoes, and maybe we are tempted to say, let's protect ourselves against the producers of potatoes, because we are not all of us involved in this production process. But in the case of capital, this is very interesting. Almost all of us, we are involved in the production of capital. So we are producers of capital in the same time as being consumers of this. So when we are regulating this market, in fact, we are fighting against ourselves. Yeah, we are introducing a lot of barriers that are against us and as producers, and this is very strange, particularly in the case of this market. I want to take the questions at the end, and I want to move forward to all the presenters in order to create the whole image about the subject. So for this reason, I'm inviting Mr. Radulescu to take the floor, saying that his topic will be about the credit market in the COVID era. Yeah, because now we are also in the pandemic time, and this is also important to be taken into consideration. Us being producers, us being consumers of capital, we are affected by this crisis. Mr. Radulescu, thank you for your presence here, your attendance of this section. You have the floor.
Thank you very much. I would like to start first with a few very small comments, short comments on what Cristian Popa had just said. There are two issues that I want to touch. One is my own experience as a tenant in an apartment flat in Washington, D.C. I went there and I got a contract. The rent I was paying was something like around $1,000 a month. And the contract specified that there is a maximum ceiling for my rent. I said, wow, this is interesting. Well, the maximum ceiling was something around $4,000 a month. And I said, wait a minute. So I had this contract for 1 year. The next year you could raise the interest to 4,000. And the owner said, well, the contractor said, this is the market which sets the price. Which means, yes, it was a ceiling, but this ceiling was set such in a way in order to not distort the market. And the second small comment is a kind of a small joke regarding the control of prices in communism. And this joke said the following, which is not a joke actually. Inflation in communist country is not measured by increasing prices, but by lengthening the lines in front of the store. And toward the end of the communist time, we saw precisely how it works. All the shelves were empty and all the prices were fixed for nobody. And the black market was the one who actually ruled at that time, showing that either you let the market do the job or you hurt everyone. Let me turn now to my presentation, and I would ask kindly Professor VOICU to help me in going through the presentation. And please, the next slide, which gives the agenda of my presentation and the usual disclaimer that applies here as well. Next, please. And another one. So macro financial. So I realize that even if my topic would be something which happens now and in the future, I cannot start but speaking about where we start from. And where we start from is actually given by the twin deficits and the interest rates in our region. Where we are here, we are by far in the worst situation. And we are in the worst situation because we have the two deficits, the current account and the budget balance, which are the worst among the 5 countries that I took into consideration. And this is, for some reasons, it doesn't show, it's just the year before, so it's 2019. Go back, please. Thank you. So we have the worst deficit of the current account and the worst deficit of the budget. And this is reflected in the sovereign rating and in the cost of long-term financing. What I could notice here is that the cost of financing is to a lesser extent linked to the sovereign rating, as much as it is linked to the developments in the 2 main indicators that I'm referring to, which shows, for instance, that Bulgaria, which has only 1 step above us, is BBB, we are BBB minus, and has the best condition in the long-term interest rate. Why? Because both the current account and the balance, the budget balance, are the best in the region, while the other are worse. This is the reason why we have also the highest interest rate, because not only that we have the worst situation, but this is a deteriorating situation. Next, please. Next slide, please. There is one point where we are a little bit better than some of the other countries. Of course, it is excluded from here Bulgaria, which has the currency board for something like 25 years now, and which is has a flat exchange rate. All the other countries have variable exchange rate. We are the blue line here, and while we have a depreciation, we start from 2015 and up to now, actually. We are the country which has the lowest fluctuation, and the depreciation was rather steady. Thank you. Next. However, the 5-year benchmark bonds in the this region shows that first we have the highest. It seems to me that is something wrong with the way in which my presentation is taken by the system. The circle should have been to show the, or it is in my version, should have shown actually the peak, which was at the beginning of this year. And not only that we have the highest interest rate in the region, but also we have the highest increase in the time of the beginning of the crisis. And our decline was a little bit less significant than in the other countries. Thank you. Next. Why is important for each and every person this? Not only because we as a country pay for our debt by far more than all the other countries, but also is reflected in the borrowing cost of every single debtor in the country. This is an important factor to consider why it is more expensive for us to borrow money than for others. Another important issue that I want to just to flag a little bit is that there are a number of reasons, macroeconomic reasons, for which a depreciation of the leu could appear in a certain way a solution, or at least a acceptable step towards more equilibrium. Well, I could say that this way everyone would be hurt because credits in foreign exchange are very large, larger than in the other countries in the region. Therefore, a depreciation may have a harmful effect on the overall equilibrium in the economy. There is another impact that the high deficit could lead to. This is the so-called crowding out effect. The non-government sector has difficulties in borrowing from the banks because the banks go to lend to the government. At this moment in time, though, this is not an actual situation, even if the government has a larger share in the portfolio of the banks than the private sector, because there is enough liquidity in the system. Next, please. Let me turn to the financial intermediation, which is the second weakness, significant structural weakness that we have. And I put here the total assets of the banking sector as a share of GDP. This is in Q1 2020. And we are at 50% of GDP. The next in line is Bulgaria, which has almost 100%, almost double. The EU 28 has 250 almost. I think that no further comments are necessary to this situation. Next, please. The same is valid for the financial inclusion. We are far from the next, which is Bulgaria in the region, and then the next one is Lithuania and Cyprus, with by far less, so numbers by far lower than in the other countries, which makes the situation more difficult. Next. Next, please. Okay. No, before. One before. Yes. We have a study made by one of my colleagues, and which was published last year, which gives the makes a panel regression, which concludes to the followings. Higher financial inclusion is associated with lower income inequality. So, however, an increase in financial intermediation reduces income inequality, but to a lesser extent, which shows that lower income inequality leads more to higher financial inclusion than the other way around, even if they are, of course, interlinked. Education policies are here a key, because with higher level of education, with more secondary and tertiary education, the dispersion of earnings is going to be somewhat reduced. Of course, the economic growth reduces income inequality, and countries with an economic growth above the EU average tend to have lower income inequality. Unfortunately, this is to a lesser extent valid for our country, which marks probably the highest income inequality in the European Union. And the same is valid for the fact that higher age dependency ratio is associated with widening inequality. Next, please. The role of the banking sector in financing the real economy could be very significantly improved, and this is the most polite way in which I could put this situation, the situation we are now in. We see that the ratio of credit to GDP reached a peak in 2010-2011 of about below 40% of GDP. Unfortunately, a part of this peak was created actually by the crisis in the aftermath of the crisis in 2008, because what happened in the first years was a huge increase of non-performing loans rather than an increase in the good credit to the economy. Now we are at about 25% of GDP, out of which the loans to households are by far larger than the loans to the corporate sector, which has a mere 11% of GDP, way below what happens in neighboring countries. Next, please. Is there a potential for increasing the indebtedness in the economic sectors? The answer is yes. We have made several studies in this respect, and we discovered, based on the balance sheets provided by all the enterprises in the economy, that there are something like 70,000 firms that could be considered top performers, in the sense that they are in the bracket of the best 15% companies in 7 out of the last 10 years. These companies have a potential to borrow of something like a total of 126 billion lei, so which is something like 30 billion euros, an increase in the credit to companies that could be obtained by the best performance in the system. We have here a list of those who, based on the balance sheet that we have, how the different branches could access this kind of money. Of course, this is a theoretical maximum level. It depends very much on the interest and on the business plans that every company has. We see that industry and utilities are the biggest potential borrowers, while agriculture and construction are the least among the potential borrowers. Next, please. The good news is that the non-performing loans ratio, this is the, sorry, I put only NPL, is non-performing loans, for those who are less familiar with our language, which is not necessarily common for everyone. So we see that the non-performing loan ratio declined from a peak of 26% in 2015 to something like 7.5% currently, and which is in June this year, a little bit above 7.2% at the end of last year. However, these numbers may be to a certain extent underestimated, because actually we are crossing a period where debtors have opportunities to postpone their payments up to 2021. Therefore, these numbers may not reflect completely the reality. We see that the number of companies with loans in the total number of companies is extremely low. It has been 11% and has remained at 11% throughout this period. But I must say, we are talking about credits from banks in Romania and not from non-financial intermediaries, and not from foreign parents or other entities abroad. So the actual numbers of indebtedness is significantly higher than that. However, it remains lower than it should be for a good development of the system. The interest rate has declined. It has declined from 11.9% in average in 2015 to 7.9% currently. It appears to stagnate around this level in the last few years. So this is the overall picture of the developments in the banking industry. Next, please. We need to have a better financial intermediation. This is without any doubt. If we want to be successful as an economy, we need to have more access, and not only access, more credit in the economy. But to do so, we need to have companies with adequate financial health. In this respect, we are in an extremely bad situation compared to other countries. While debt to assets has been and has remained at an acceptable level of a little bit, something like around 60% throughout the period that I am referring to, the value of the debt to equity is very high. It declined a little bit from more than 200% in 2015 to something like 185 in 2019, but is very high. it is obvious that there is not much room for improving without increasing. That means to increase the nominator, we need to increase significantly the denominator in this equation. The next, please. What we see is a certain improvement over the period in the balance sheet liquidity, with a higher share of companies with a debt to equity below 1 against the debt to equity above 10. So it was by far worse in 2008 than it is in 2019. However, the good environment before this very critical year was only partially used by companies in order to increase their capital. And after the crisis, we expect to face new difficulties in this respect. Next, please. When we look at a crisis, we must look at the opportunities that are generated, not only challenges. So the question that we asked was, what are the intentions of the companies to make investments in the next 12 months? 47% of the companies said that they prepare to have investment next year. This is, I should say, a rather low number considering the big challenges that we face. In order to change the situation, the position of our country in the economic cycle, in the economic development of Europe, we need more investment. Next, please. The level of capitalization in the corporate sector is probably one of the worst in Europe. Undercapitalized companies, both in terms of numbers and in terms of total debt, is very, very high, even if it is declining from the peak which was reached in 2008, 2009. At the end of 2019, there were 244,000 companies, which means more than a third of the total companies that had equity below 50% of the share capital, the vast majority having negative capital. This is very difficult to live with. Next, please. I want to stress again this point of capitalization. What happens in our country? In many, many instances, far too many, owners of companies decide rather to capitalize their companies, they decide to lend money to their companies. This appears from a superficial point of view be seen as an acceptable formula. Well, this is not. Of course, when you lend money to your own company, the level of capitalization of this company does not increase. And when it does not increase, what happens is that you remain with the negative capital. I could assure you that there is no bank in this world that is going to lend money to a company in which the owner himself or herself does not believe in this company, and instead of increasing the capital, lends money to the company, which means, well, if something wrong happens, I take my money out and that's it. This is a full recipe for underdevelopment for decades to come. Basically, no business opportunity cannot be used via new credits unless the capitalization of the company is at an adequate level. And this is a strong reason why we are not performing well in the economy overall. Next, please. What could be done in order to improve the capitalization? One measure has already been taken by the government, respectively granting reduction for profit taxes and or for the micro enterprises income-based taxes, depending on the related equities growth rate. This is a version of using the carrot rather than the stick in order to make companies to act more responsibly for the whole economy, not only for themselves. But it would be necessary to have an explicit mention of an institution or to be the person concerned to act on behalf of the state in the case that undercapitalized companies are pushed towards a more responsible behavior. So we suggested that the agency for the fiscal authority of the country could perform this function, but of course this is something that the government needs, or the legislation should be changed accordingly. The possibility to increase the social capital by converting debts to the debts to shareholders into capital when the capital is negative, of course, or is under the legal level, could be also a possibility to act. And it would be something which has been done in other countries, establishing a blacklist to include people that mismanaged a company in one or more cases in order to be, in a sense, prevented from developing new businesses in which other victims would appear from his mismanagement. Next, please. There are a number of programs of the government. I listed here 4. SMEs Invest, grants from the European funds, leasing for small and medium-sized companies, and SME Factor. So there are various programs that support the liquidity in the system. They have been, most of them, launched this year. Of course, there were grants from EU funds before, but I was referring to those which were launched associated with the pandemic, and they have a quite substantial influence already in the economy. It could have been more, potentially yes, practically no, because with the burden that we have started with, we don't have much room to further expand the deficit. This is yet another reason why a responsible fiscal policy is always a precondition in order to be able to support the economy, to practice counter-cyclical policies when the need appears. Unfortunately, the error made before the crisis in 2008 was done, I should say, to a by far larger scale, starting in 2017, with the result that we have now, which, among other things, includes the fact that the capability of the government to support the real sector remains limited. Next, please. Again, because we are in tight constraints regarding the resources available, our suggestion would be that the approach first came, first served could be changed to have some criteria for selection which could favor companies with a proven track record of adequate business management, companies that can trigger a structural shift in the economy towards European trends such as digitalization, higher value added, green economy, or others, and possibly favoring the critical sectors of the economy such as agri-food, energy, and healthcare. Next, please. I think we are now at the, yes. We will have, without any doubt, many, and we still already have uncertainties regarding the recovery period and the costs associated with this situation. We don't know where we are when the crisis ends and where we will be at that moment. We must channel the public investment projects on reducing structural vulnerabilities and create the environment for private investment. Unless we do so, we will not have the means to overcome the situation where we are at this moment. Of course, we need to look at the structural vulnerabilities that need to be solved. And those include, among others, lax financial discipline of Romanian companies. There is an enormous amount of overdue payments in the economy, and the length of the period, the average length between the moment of receiving a good and paying it has increased in recent years. It is an important role of avoiding the middle income trap, to look at solutions that increase the value added produced in the economy and stimulating the innovation. Unless we do so, we may remain further behind the European level. We have an enormous problem of demography, which has actually two reasons. One is the very low birth rate, and the other one is the very high immigration rate, which is, to my mind, the most terrible failure of the Romania, of the democratic Romania in the last 30 years. The fact that 4 or 5 million, who knows how many actually Romanians, decided to leave the country. This is one of the most dangerous developments for the future of the country. We need to support the banks in order to increase the financial intermediation. But when I say support the banks, I mean abandoning totally the legislation which is created as if the purpose of the country would be to destroy the banking system. Cristi Popa was very gentle in his way of speaking about these pieces of legislation. For the time being, thanks to Lord, the Constitutional Court rejected all those initiatives that would have had a terrible impact on the development of the banking sector in Romania. And next, I think this is the end. Yes. Thank you for your attention.
Thank you, Mr. Radulescu. A very, very, let's say, complete image on the credit market of Romania, and of course, we see that it's very complex. The situation is not so simple because we are talking about companies with not so much potential, especially if you are looking to their capitalization, of course. And it's very important to understand in this case the reasons for protecting the consumers of financial services, for instance, how these companies that have negative capital can be protected as consumers of loans from the perspective of banks. It's an important question. Why we should protect them and how, of course. And what you said at the end of your presentation, it is also important. We see that this initiative of protecting consumers of financial services became more and more, and not only in Romania, a subject of politicians, of their populism. Yeah, because normally a politician that is adopting an easy strategy is subtracting from the hat a category, a very important category, and after that they are claiming to be their defender. And they are saying, okay, I'm here, I can protect you. But in fact, this protection, it's a false one, because we'll introduce a lot of regulations that are not so reliable, not effective, and at the end, we see that the access to the capital market will be significantly affected, altered. Now we are going forward with our event. I want to ask the presenters to be a little bit more concise, to 15-20 minutes, in order to have a small room for the questions. So Mr. Dănescu, that is the representative of the banks, of the one of the most important association of banks in Romania. I'm inviting you, Mr. Dănescu, to take the floor and to present the perspective of the intervention of the state in these financial markets. Mr. Dănescu, you have the floor, please.
Thank you very much, Cristian. I would like to start to congratulating the organizers, i.e. the Public Relations School of Bucharest Academy of Economic Sciences, namely Professor Cristian Păun, for organizing the 11th edition of the International Conference, The Future of Europe. I would also like to thank you for giving me the opportunity to be in this panel next to well-known guests from Romania and from abroad. Well, the topic of this panel, consumer protection in financial services, is a hot topic, if I might word it like that, both in Romania as well and also in European fora. Actually, we can say that we have been witnessing a stronger and stronger European trend and equally a national trend related to the consolidation of consumer protection in general, irrespective of the field of the industry. And as part of this, needless to say that consumer protection has been a concern of the market for banking and financial services as well. From the point of view of the banking industry, it is but natural for decision makers to have such an agenda, be it in Europe or at the domestic level. The challenge pertains to the manner in which the concern is transposed into regulatory elements and to the impact of these elements could generate impact which, in the end of the day, could be a negative one for consumers or to the intended aim in the opposite way, of course. For example, lately in Romania, tens of legal initiatives have been submitted, initiatives which claim to be on the interest and with the intention to protect consumers, but in fact, they had a strongly negative impact for the banking industry active on the Romanian market. We strongly believe that this is the main reason why Romania has the lowest financial intermediation in Europe, which strongly affects consumers. All these initiatives caused the financial intermediation in Romania to drop from 40%, crediting to GDP, to drop to 25%. This fall is equivalent to missing Romania's chance to have a higher GDP by over 30%. Many of these initiatives ended up by not coming into force, or they entered into force in a final amended wording compared with their initial wording, a situation which alleviated their impact. Locally, at the least, we could certainly talk about a trend to over-legislate, regulate the banking industry. This fact generates unpredictability and additional costs which affect banks, business model, and in the end produce a negative impact for consumers, whether we are talking about lower investments in innovation and digitalization or about fewer possibilities to provide even a more competitive price offers. In the words, we need to be very careful if we are to put ourselves in the shoes of lawmakers, that is, careful about how to intervene in the banking and financial industry. Sometimes consumer protection, consumer interest, if you wish, can be better by not enforcing new regulations. The banking sector and consumers are not adversaries, but rather long-term partners. And moreover, for their mutual benefit, the manner in which the banking sector has developed along the years is the strongest proof of this reality. If you are to refer as a case study, if you wish, to the Romanian market, banking products and services are more diverse and easier to access, the banking industry being certainly one of the industries that are strongly digitalized. And this is the outcome of free competition on the market, competition which acts in banking too, just like in other field, for the ultimate benefit of the consumers. This partnership dimension has been highlighted lately. Here I have in mind the support granted by the banking sector to the debtors, legal and natural persons alike, along this year. Either what we talk about implementing some governmental decision or about policies promoted proactively by banks at individual level, the banking sector as a whole has been solidary with its customers, directly and indirectly, affected in the context of pandemic evolution this year. Banks suspending the payment of their installments for up to 9 months. I remember the figure, about 25% from our consumers take advantage from this postponement. Coming back to the European agenda now, I have to mention that recently a procedure to revise the directive on credit agreements for consumers was started. From the very beginning, I have to say that this directive on credit agreements for consumers allowed banks and consumers to act under a clear framework with fair access to loans. At the same time, of course, there are issues which could be addressed with a view to improve this framework. Some of these issues being actually targeted also in the consulting process initiated by the European Commission. For instance, one of these issues pertains to the fact that based on the current provisions of the directive, consumer receive a very high volume of information, which to a large extent is repeated during the different stages of the process of being granted of a loan. And it is very high volume of information, many times repetitive, in a durable format, respectively on paper, which is interpreted ad literam by different member states, a situation which can make consumers overlook precisely the essential information. One of the clarification which could be brought here should contemplate, for example, simplifying the information needed next to the possibility of document transmission in digital format also. A major area of concern pertains to a fair assessment from the pre-contractual stage already of the possibility of over-indebtedness and the default risk assessments, known as creditworthiness assessment. One of the variants on the discussion in order to address this issue includes, among others, the introduction of certain measures to prevent an excessive loan cost, measures such as capping interest rates. Preventing over-indebtedness in the common interest of banking institutions and of consumers alike. Such a situation could have a negative impact on consumers' lives and on banks' balance sheets if we are taking into account the target of cutting NPLs, for instance. From this perspective, banks consider this reduction essential and make many efforts to assess the reimbursement capacity of their prospects. But here we are in the presence of the issue of standardization versus flexibility. The risk generated by any new standardization element could make the risk of financial exclusion soar. For instance, setting some common standards in the creditworthiness assessments would establish an accepted average level which could lead to the exclusion of some debtors with atypical profiles because of their uneven incomes, such as the self-employed persons, for example. This is why I am the opinion that the best solution will be flexibility, allowing banks to take into account their knowledge of prospects, i.e. the specificity of each customers, as well as the national specificity. In this regard, the guidance of loan origination and monitoring published by EBA on May 29 have already imposed new requirements and given clarification on how to implement the provisions of both the CCD and the MCD of creditworthiness assessment. Such guidelines are not enforced yet. Therefore, it seems to be reasonable to wait so they can be assessed in the light of their implementation before adding new requirements. As regards capping interest rate, if are to refer strictly to the banking sector and not to the financial sector in general, we can mention aspects related to affecting free competition and possible negative effects for consumers. First and foremost, like with any other banking facet, and unlike other industries, the manner of establishing and the variation of interest rate are clearly set forth in regulations. Based on this regulation, interest rates vary freely in each EU member state, function of national specificity, but also function of the specificity and performance of each bank and of the business strategy of each individual banking institution. For instance, if a bank has its business strategy to increase its portfolio for a certain loan product, of course, this bank will increase its competitiveness on this segment, including by cutting interest rate. Therefore, capping interest rate could affect the free competition among banks. Moreover, in such a scenario, we cannot exclude the possibility that certain banking institutions, if the capping would exceed their own cost, limit the presence of certain product in their loan offer, a situation which could affect consumers' possibility to choose and have access to a diverse array of loan products. Free competition in banking has led on long term to lower interest rates. Again, if we refer strictly to the banking sector, I do not think in real terms that we could talk about a problem regarding the level of interest rate. Any standardization of interest rates applied to the bank tenors of European level could lose sight of the national context. We all operate from operating cost on different markets and the borrowing cost of every country to the magnitude of risks, to the rating of each country, etc. Otherwise, the pursuit of interest only for consumers against contract partners means the gradual expulsion of the free market outside the European economy. This is why such a decision should be pondered over very carefully, precisely in order to avoid, at the end of the day, a negative impact not only for the banking industry, but also for consumers, as I mentioned earlier. Regarding the national level, a legal initiative to this respect has already adopted initiative which currently is under the constitutionality assessment with the Constitutional Court of Romania, and needless to say, we are waiting for the decision which is to be taken. In conclusion, I would like to underline the fact that the banking sector understands and supports the concerns of decision makers regarding consumer protection in financial services. In Romania, as well as all across the European Union, the banking sector is interested in developing successful long-term partnership with consumers. We have been and continue to remain an honest and constructive partner of dialogue. But to an equal extent, we believe that occasionally we have to give a warning about the risk that some new regulations could generate, leading to over-regulating and to a negative impact for banks and for consumers alike. Free competition, especially when it comes to interest rates, is essential in order to foster market competitiveness for the benefit of consumers in the end. In the end, Christian, I'm thanking you again for the invitation, especially because we know that the populism that dominates our days excludes dialogue with experts. Thus, politics can kill the economy. Thank you very much.
Thank you to you too. I keep in our discussion to very strong ideas that you highlighted by your presentation. First of all, between bankers and the users of financial services, there is no war, there is no conflict, there is social cooperation. We are cooperating together because there are common interests. The banks, the non-financial institutions have common interests with their clients. There is no conflict there, and everything can be solved by cooperation, not by adopting an aggressive attitude and starting a fight that finally will have opposite consequences than predicted. And of course, another very important idea, protection, consumer protection should not be transformed into a number of regulations that destroy the competition. The most important protection is given by competition. So we should be careful with using such measures. And I'm not including only capping the interest rates, because the capping of interest rates is only one, let's say, area of intervention of the state. We are talking also about capital requirements for financial institutions. That is also inappropriate. If you remember about the pension funds, the politicians introduced not reasonable capital requirements for pension funds, and we should understand that this financial intermediation, in fact, is based on the others' capital. Yeah, financial institutions are attracting capital from the producers of this capital. They are intermediaries. They do not need to be forced to come in the equation of financial intermediation with their own capital, a lot of capital, because if you are doing this, in fact, you are creating barriers, entry barriers for the market. Now I'm giving the floor to the next presenter, that is Florin Bâlcan. Also, he graduated our faculty, so he came back to inside of his former faculty of international business and economics. We are very happy to have his presence here together with us. He's country manager to Provident, one of the most important non-financial institutions of Romania. I really appreciate this type of non-banking, not non-financial, non-banking financial institution, the presence of such intermediaries, because, as I said, the competition is very good and the quality of financial products is provided by this competition, by the presence of such intermediaries together or alongside the banks, alongside other type of financial institutions. Mr. Bulcan, you have the floor for your presentation. With that special request to be limited to a reasonable
Thank
time.
you, Mr.
Paun.
I will speak freely for a period of time, so I would ask Roxana if we can take the presentation until the moment that I will ask you for it. So hello everybody, and thank you for the invitation. It is really a great honor for me to be speaking here next to very important voices of the Romanian financial sector, and as Christy mentioned, as an alumni of this excellent faculty, and as well on behalf of Provident Financial Romania, the biggest consumer credit NBFI in the country, which is not part of a banking group. It's worth mentioning that we are also one of the founding members of the Consumer Credit Council of ALP, the trade association of the non-banking sector in Romania. And as a sector, we believe that we provide an essential service to Romanian consumers by offering access to credit for underserved customers. We strongly believe that sustainable access to credit is imperative for all socioeconomic groups and helps to support the economic and social mobility of the individuals. Now, if I look at this type of dialogue, I've always considered that it is very important, and it is maybe even more so in these unprecedented times. In the recent years, as my colleagues were saying, there were a lot of discussions regarding the need to change the regulation framework in the Romanian financial industries. And true to be said, the unethical behavior of some companies, primarily in the NBFI sector, has created a negative perception across the entire sector. Nevertheless, with this in mind, I think we have a clear responsibility to continue our joint efforts to increase trust and transparency. And this is because we believe that trust is really the foundation of every relationship. And I think we can all agree that there is significant more things that we can do, taking into consideration even the regulatory. We all want regulation to a well-functioning financial market and is designed to treat both customers and businesses fairly. We all share the support and the concern of over-indebtedness for our customers. For many years, discussions in the parliament that my colleagues mentioned before may have led people to believe that the industry is actually an enemy of the lawmakers. And the reality is that we are not. We just need to do more to achieve a dialogue of trust and honesty so that the regulatory objectives are being met without unintended negative consequences for either the customers, the companies, or the economy as a whole. And this is maybe even more relevant now, as Mr. Dănescu was mentioning, the European review of the Consumer Credit Directive, or the several proposals that are in the Romanian Parliament that could severely impact the proper functioning of the financial services market and the macroeconomic stability of Romania. So I believe that this is a very important topic right now. Looking ahead, I think we all agreed that we do not see yet the full impact of the pandemic, and it is probably very complicated to predict right now what is going to happen. I think the financial sector has both a responsibility as well as a privilege right now to directly contribute to how and when the Romanian economy will resurface from this. We want to play a fundamental part in a well-functioning economy that leads to prosperity, well-being, and growth. And these are not just words. We truly believe that we can get there. If we look into the pandemic impact, I think one of the unbelievable things about this period is how quickly the unimaginable became unevitable. In maybe less than 72 hours, even world's most traditional companies transitioned from office-based working to working from home. And this includes us with 140 years of experience of working with our customers on a day-to-day basis, face-to-face interaction. And even from the past, we could say that, you know, the work as it was on the grasp of being redefined. But the reality is that we needed a push, because if we look, you know, cloud computing, VPNs, Zoom, Skype, and a lot of collaborative tools, they have been here with us for a longer period. But the reality is that we didn't use it. And despite the fact that we had everything, all these elements, you know, at our fingertips, we still continued to cram ourselves into subway trains or to take the Bucharest traffic jam and still come into the office. Now the pandemic put the fast forward button for maybe 10 years ahead suddenly. And I think it would be interesting to understand how this would maybe, if we translate this into the financial service, what could this mean, a fast forward button? Now, Mr. Dănescu was mentioning that a lot of the banking sector is already well digitalized. I think from the NBFI sector, I'm speaking and saying that we have still a lot of steps to do. And it would be great to be able to take a loan with just a few clicks and an electronic signature from any player in the market, with technology and digital access to data, ensuring key responsible lending practices. So I think more than ever, the digitalization is such an important item that should be on everybody's agenda. Now, with your permission, I would like to share with you some of our personal learnings from the pandemic. As you may know, we have an inclusive business model that allows us to serve customers which sometimes struggle to get access to finance. And 40% of our customers live in the rural area, and a lot of customers are taking from us for the first time a loan in their lives. We support the financial inclusion, and we believe that we are helping them by creating a history. Every year, thousands of customers that we create the first history in the credit bureau are then refinanced by banks. And we accept that this is the role that we want to play in the financial system in Romania. On the other hand, what you may not realize, every year we have millions of physical interactions with our customers. It is the basis of how we do the business. And when the first lockdown came, we make the difficult decision, but very necessary, to actually stop the business completely for 3 weeks. We decided that we want to put the health of our people and our customers first, and we want to make sure that we do the right thing. Obviously, this has resulted in significant impact in the financial results for the year, and probably will have impact in the next years as well. But we believe that those 3 weeks in which we looked and we make sure that our agents have been properly equipped and trained to continue their activity, in which we changed the processes and we adapted so that we minimize the interaction with the customers, were crucial in making sure that our customers feel taken care of. And we looked internally and we asked only agents who are willing to go into the field. And as well, we were talking to the customers, and we were basically going and visiting only the customers who accepting during the call our visit. Obviously, additionally, we looked and we implemented a wide number of alternative remote payment methods. We implemented as well, you know, pay by link, pay by SMS, pay in the corner shops, or direct payment solution from our website. And maybe not least, we obviously implemented the public moratoria on top of the similar internal payment freeze measures that we used to have in the past years as well. We have then looked at our role into the society, and here we used part of our advertising budget to support the fight against COVID by giving 100,000 euros to the association Dăruiește Viața, which used this money to raise a modular hospital fighting against COVID. It was our way to show our social solidarity to the fight in this major sanitary crisis which has hit our country. But maybe with the specificity of our business, this has gone far, far away, because with having these interactions with our customers, we had a lot of our field staff that actually volunteered to do a lot of basic groceries and errands for our elder customers who were locked down in their houses. And throughout this entire period, we were actually very curious to understand how our customers felt about how we treated them in this period. So we asked 500 random customers to tell us about if they felt protected by us, if they felt that we did the right things. And now if we can put maybe these a couple slides from the presentation, we can see that somewhere at about 86-90% of them felt that there was enough equipment that our agent used, and they felt safe during the interaction with the Provident employees, which is something that we felt is very important for us to be able to move forward. And if we look at the next page, I think the element that we have seen from our customers is that in these moments, they feel that the companies actually should contribute and they should put a lot of emphasis to the social role in the community. So 88% of them believe that in difficult situations, private companies need to get involved and help through various activities such as donations and volunteering. And in the meantime, they showed us that their needs never go away. And they have such basic needs that even if there is a pandemic, 87% of them still feel that it is very important for them to have access to provident services in our case, but I would say generally to a source of finance. So this is a way basically through which we believe that is one more evidence that we transparently meet a genuine need in the market that goes beyond frivolous expenses that probably are put away in this period of time. Now, we were talking about digitalization, and we were saying that this is a much needed evolution that we should all be focusing on. And I truly believe that there is a niche of customers that will always remain as today, and they will not value digitalization that much. But the reality that longer future digitalization will be very important, and a big chunk of population will move into this direction. Reality is, on the other hand, that there continues to be a lot of legislative challenges that needs to be clarified in order for the financial sector to be able to invest more in this area. And Mr. Radulescu was telling us about the willingness that companies have today to invest, and that this willingness is much lower into this COVID period. Mr. Popa was telling us that capital needs to circulate, and I fully agree with this. And reality is that, especially in this time when the liquidity is lower in the market, I feel maybe the obligation to remind ourselves that there are currently tens, if not hundreds, of millions of euros that are blocked by most of our ALB members in unworkable capital due to the capital requirements currently set by central bank to NBFIs years ago, when the Lombard rate was 3.25 or 3.5%. As opposed to 2% today, which rightly is today, because I think it was a great decision to help the liquidity of the banks today. However, it's not really going into the same direction for NBFIs. And we believe that there are hundreds of millions of euros which could be better utilized, not just to fuel some healthy consumption, but also to generate new jobs and more innovative products and services, and to invest into the digital arena. Now, in the end, I'd like to share with you a short video that we recently launched as part of a wider project that we called Provident Transparent, or Open Provi. We felt that there is significantly more things that we can do to improve transparency and the understanding of our social and economic role, but also maybe to kind of take away some of the myths around our costs, our APRs, our community investments, or what we can offer as an employer. Now, you can see there are more movies there, about 5 of them. All of them are on our website. I'm just sharing one of them with you, which I thought that it would be more relevant to you guys. So, Roxana, if you can help us, please. Not hearing anything. Still not hearing. Am I the only one who is not hearing any sound?
We are not hearing also.
Yeah, we are on. The sound is not. Maybe it's a problem with Transmission, maybe on the Facebook, it's okay.
Just a sec, we're gonna try again. Hope this time it works.
Este Maria, are 39 de ani,
This time it works.
stat de lângă Buzău împreună cu cei doi copii ai săi, Rareș și Mihnea. De 2 luni, atelierul de confecții la care Maria lucrează are probleme și programul ei de lucru s-a redus la 4 zile pe săptămână. Asta înseamnă că venitul Mariei a scăzut și nu îl primește mereu la timp. Anul acesta, Mihnea începe clasa 1 și Maria vrea să nu-i lipsească nimic, uniformă, manuale, rechizite. Maria a căutat un ajutor financiar la rude și prieteni, însă fără mare succes. Să amaneteze broșa de aur lăsată moștenire de la mătușa ei nu e o soluție, iar de o formă ilegală de împrumut nici nu încape vorbă. Ar putea încerca la oraș, la bancă, dar fără un istoric de creditare și cu un venit redus, șansele de a obține un împrumut sunt foarte mici. Așa că Maria sună la Provident. Poate că nu este cea mai ieftină opțiune, însă știe de la vecinii ei că sunt oameni serioși, că au costuri clare și că poți primi și plăti împrumutul chiar la tine acasă, indiferent că stai la sat sau la oraș. Astfel, Maria ia de la Provident un împrumut de 800 de lei și e mândră că Mihnea poate începe școala cu dreptul. Își dă silința să plătească ratele la timp, însă lunile de iarnă sunt grele, cu multe cheltuieli. Maria știe însă că va avea întotdeauna înțelegere de la Provident dacă se întâmplă să nu poată plăti o rată la timp. Și, cel mai important, Maria are siguranța că situația este sub control, pentru că nu există penalități de întârziere. La Provident rata nu crește, plătești doar ce scrie în contract, niciun leu mai mult. Este martie, primăvara bate la ușă, iar fabrica la care lucrează Maria a depășit problemele. Programul de lucru a revenit la normal și tocmai a primit și o mărire de salariu. De acum, Maria are un istoric de creditare și poate încerca cu încredere să ia un împrumut și din altă parte, poate în condiții mai avantajoase. De aproape 140 de ani, milioane de oameni din întreaga lume își împlinesc visurile cu Provident. Mai bine de 1 milion dintre aceștia sunt din România. În tot acest timp, misiunea noastră a rămas aceeași: să susținem incluziunea financiară prin crearea unui istoric de creditare și să oferim cu responsabilitate oamenilor din toate păturile sociale acces la o formă de finanțare flexibilă și transparentă. Vrei să afli mai multe? Vizitează provident.ro/transparent.
Thank you for watching. I'd like you to see this more than just a PR exercise. I think it's rather an example of transparency and dialogue, which, again, I think all of us can do significantly more to achieve more. But now, if I would try to summarize the elements and the key elements that I see here, is basically we should look for more dialogue and transparency on our side and more predictability in the lawmaking process, as Mr. Dănescu was mentioning as well. I think we need to have an improved collaboration to help Romanians and the economy cope with the financial impact of COVID-19, and an accelerated implementation of digital agenda to improve financial intermediation. Thank you very much.
Thank you for your presentation. Very, very interesting example for everybody. As I said, the most important protection is achieved by understanding that you should cooperate with your consumers. And one of the most important elements in this cooperation is to be transparent, to do not lie that consumer, do not hide useful information, important information for that consumer. I'm very, very confident that the financial intermediation in Romania significantly improved in the last years with the efforts of everybody, regulators, the national bank, but also the financial intermediaries. Thank you for your very, very important case study example. And now I'm giving the floor for another case study to Adrian Codrlașu very quickly from CFA. He will present to us their own internal code about ethics and protection of consumers of financial services. Adrian, you have the floor. Thank you for your presence here.
for the invitation. I will present. I share my screen.
I don't think we are hearing you.
Your sound is a little bit very low. Maybe the microphone. Yeah. Maybe you should take out the headphones and to speak on the microphone of the computer. Maybe it's better.
Now it's better.
We are hearing very low.
A little bit, yes, yes.
Okay, just a minute.
But it's better than a few minutes ago.
Yes. Now it's okay.
It's okay. Go.
Now
Yeah,
it's
now
okay?
it's okay. The sound is very good. Yeah, thank you.
Okay. Okay, thank you. So I'll present the way CFA Institute is protecting the financial services users. Basically, the CFA Institute is I think the most respected financial association in the world that has a code of ethics and professional conduct that help clients to receive better financial services. So basically, there is a code of ethics. There is some requirements regarding the transparency of the information that is provided to customers, so that the customer will choose the financial services knowing both the risk of the financial services and also the return or the benefits of the financial services. And basically, by transparency and by better information provided to client and better behavior of the financial institutions, that this way the customer will be better saved, not by keeping the prices of financial services, but by transparency and competition. So competition with transparency will result in better serving of the financial client. So in a short time, I will show basically my presentation. CFA Institute, as I was saying, has some codes. This is an integral part of CFA Institute mission to develop and administer best practice guides and standards, so that to guide the investment industry. And all these guidelines place the client's interest first. So first, for a financial service company is serving the client. And there are few codes. I'll speak only about the first one, Code of Ethics and Standard of Professional Conduct. There is also a Global Investment Performance Standard, Asset Manager Code of Professional Conduct, and Statement of Investors' Rights. So the Code of Ethics, this is the most important document of CFA Institute. All the candidates in the program and the members of CFA Institute, which I think, as we know, are one of the highly trained financial professionals in the world, have to comply with the standards, and each year they have to sign that they are respecting it and they are complying with its requirements. So what this code is about? This code requires to place the integrity of the profession and the interest of the clients above own interest of the employer of the financial services industry and own interest of the financial service company. Also requires to act with integrity, competence, and respect, and maintain and develop professional competence. So the persons that are providing financial services are required to act with integrity and to be professional competent. Also, there are duties to clients, basically duties to clients to place the client first when dealing with a client. How to present investment analysis and recommendation, and to distinguish between fact and opinion. What is conflict of interest and how to deal with conflict of interest. Also, some points regarding professionalism. So basically, all we have to know the law and respect the law, to be independent and objective when talking with the client, to not to misrepresent facts or to present opinions as facts, and also regarding misconduct. So to respect the law and internal regulations of the financial institution when we are dealing with the client. Also, there are strict requirements regarding how to deal with material non-public information and with market manipulation. Moreover, there are duties to clients, so loyalty to clients, fair dealing, sustainability of the business with the client, how to present the performance of the for example, a fund or a certain financial instrument, and also the preservation of the confidentiality of the relationship with the client. Moreover, there are duties to employers, namely loyalty, additional compensation agreements, responsibility of supervisors. What does it mean? That if a CFA charter holder is a supervisor, may basically manage a team, he is responsible in the eyes of CFA Institute and on how the team members are behaving, and also if that team members comply with this code of ethics. Regarding the investment analysis, the recommendations and actions. So basically, when we present some opinion, this opinion should be distinguished from facts. So to say, this is an opinion, this is the analyst's opinion, not a fact. Also, we need to disclose all the conflicts of interests that can arise in a relationship between a financial institution and its clients. Also, to respect the priority of the transaction. What this priority of transactions means: first, client transactions come first, then the financial institution's transaction, and after that, the employer or employee of the financial institution will transact. So some points. One quickly on yeah.
Yeah, Adrian. Thank you for I will short a little bit because I will short a little bit your presentation, because now we are pressed by Facebook to close this panel. Another panel will start. Thank you for your insights. I will invite you in a different session to discuss more about this idea of CFA and what is doing CFA for the financial sector. So please accept my request to close the panel here, because we are pressed by the other panel. I want to thank to everybody that participated to this panel, to all the panelists, and I'm very happy that the main objective were achieved, and I think that we presented very important arguments about what it means a real consumer protection. I'm inviting also all the community to continue the conference, to continue to attend the conference with the next panel that will start exactly in few minutes and will be about the entrepreneurship during the pandemic crisis. We have a guest from United States and also a guest from United Kingdom and 2 professors from Romania that will present their opinion on this problem, particular and also very important problem of entrepreneurship. Thank you for being here together with me.